Hello, and welcome to another educational video series from Dunham Trust Company, your source for insight on Nevada trusts, estate planning, and taxes. This video begins a critical 5-part series revolving around recent legislation in California that has brought about significant changes to the tax landscape, especially regarding a particular type of trust used in planning called a Nevada Incomplete Gift Non-Grantor Trust, also known as a NING. The tax law we are discussing is CA-SB 131, which took effect in July of 2023, leaving countless Californians to seek clarity about its implications on their tax planning. We are fortunate today to have insights from two leading figures in the industry, Jeffrey Dunham, the visionary founder and CEO of Dunham & Associates, and Ann Rosevear, the president of Dunham Trust Company and a definitive voice and thought leader in our industry. Together, they will unpack the nuances of this new legislation, shed light on its ramifications, and guide you through the next steps. Here are Jeffrey and Ann.
SB 131 was signed by Mr. Newsom.
Yes, it was.
And a number of professionals in the industry, whether you're a financial advisor or a CPA or a tax lawyer, they certainly have been following it. Many didn't expect it to come to fruition, because similar bills have died in the desert leading up to a vote many times in the past, but this time it passed. It passed, and he signed it, and it's law.
That's right.
To talk about, if you would, what is it that got passed? What is the law? How does it affect Ings? What's its effective date? What's your perspective on what you've read and heard and seen so far?
Well, just as a recap of what has happened, the ING, the Incomplete Non-Grantor Trust, so that we all remember what that is, also known as NINGs in Nevada, WINGs in Wyoming, DINGs in Delaware, is a form of trust that is used for, in our view, smart state-level income tax planning. But the reality of it is that we've been watching this, and for those of us in the practice who have embraced it and said basically it is a recognized practice, it has stellar experts who have reviewed it and used it and helped their clients basically embrace the concept that an asset can go live somewhere else.
Sure.
And when an asset goes and lives somewhere else, that asset now is going to be subject to the taxes of the jurisdiction where it lives.
So where it lives. So if I had a private stock, I put it in this NING, or WING or DING, would you agree it lives in Nevada?
It lives in Nevada.
So will it still be taxed in Nevada under this new law?
It would be taxed in Nevada under the new law, but Nevada has no state income tax, right? It would not be taxed where the grantor lives in California under the NING concept. And so in the former law, you could take that asset, it could go live in Nevada, and it would be taxed federally and under Nevada law versus federally and under California law, where it used to live when the grantor had a lot of control over it. New York, several years ago, decided that that was against the policies they liked. And of recent, SB 131 now has followed suit to essentially say that if a grantor creates a trust elsewhere and continues to live in California, that grantor will pay income tax at the California state level, which are the highest in the country, as it previously would as if there was no NING. So where does that leave our clients? Where does that leave our practitioners? That's the question that everyone is asking, and that we're fielding emails and calls about this, because all of our NING structures are left with now people scratching their heads and saying, so beginning January 1st, 2023, almost 7 months ago, I now owe tax where I did not think I would owe tax. And so that brings all of us, financial advisors, trustees, attorneys, CPAs, back to the drawing board. That's why we're sitting here today.
Great summary, great summary.
that wraps up the first installment in our comprehensive 5-part series centered on the Nevada Incomplete Gift Non-Grantor Trust and its fate with the recent California tax law changes. Our second video will delve into current strategies and what some experts think, and we will explore the next steps. Video 3 will navigate the intricate concept of completing the gift, while Video 4 will break down the consequences of a completed gift. Finally, our 5th video will be instrumental in equipping you for meetings with clients who have a NING in place. We encourage you to continue to the second video. Please feel free to call us at 775-826-7900 and ask for our NING hotline, where Dunham Trust Company experts are prepared to help you answer your question on the California tax law changes and work with you on strategies for your clients with a NING.